Now we will felicitate all our panel speakers. My duty to convey my vote of thanks to all the panelists and speakers today and all the members who have joined and motivated us. Thank you so much. We are looking forward to tomorrow's technical sessions. Thank you so much. See you tomorrow.
ఈ రెండు ఒకటి బలపడుతుంది, అదొకటి ఒకటి బలపడుతుంది. బుక్ స్టాల్
Very, very happy evening to all of you. I very clearly understand that since last 2 days we have been receiving knowledge. But on many of the faces I can see like that still we are eager to learn more. Am I right or wrong, my friends? Yes? That's so nice. On behalf of Hyderabad branch of SISF ICI, I welcome you to this last session on GST. Let me watch and confirm you and convey you that. Me and Satish bhai were just discussing, Satish Shala sir was discussing, that how many of us are going to wait and for whom. I told Satish bhai, you will see. People will wait for you to only to listen to you and to understand what are the litigative issues in GST. I request Satish Shala sir, please kindly come on the dais. I request Satish Mailapur to please give a bouquet to Satish Shala. Satish and Satish both are on the stage. Dear members, Satish Shala sir would enlighten us on litigative issues in GST matter. Most of us know and has heard about him, but let me just, for the purpose of customs, let me read out his brief profile and let us know more about Satish Shala. C.A. Sadif Saraf sir, practicing chartered accountant in Hyderabad since 1999 and have experience of 23 years in various areas specialized in GST Act. He is a graduate of Commerce and graduate of Law from Usmania University and a fellow member of ICAI. He is a director of H&S Tax Advisories Private Limited and partner of Satish Saraf and Co. Chartered Accountants. He was coordinator for technical guide on sales tax audit in state of Andhra Pradesh, published by ICAI in the year 2000. He was convener of Hyderabad Studies Group on GST, constituted by Indirect Taxes Committee of ICAI. The group has prepared part on the background material on GST law published by ICAI. He was managing committee member of Hyderabad branch of SIRC of ICAI during year 2007-2010. And I was awarded during his time when he was the chairman for Sikasa branch. The Sikasa Hyderabad branch was awarded the best branch. He was involved in identification of GST faculty for Indirect Tax Committee of ICAI. He has been entrusted the job at Hyderabad, New Delhi and Mumbai. He presented more than 300 technical papers on various forums including national conferences, mega conferences, corporate forums and other seminars across the country. His article titled GST Tools for Development of Society, published in Chartered Account Journal of ICAI in Hyderabad 2021. He was a columnist on GST in Eenadu Telugu newspaper. He represented the institute in Telangana State on GST Grievances Readdressal Committee for the year 2020 and 21. He is special invitee to Indirect Tax Committee of Federation of Telangana Chambers of Commerce and Industry for the year 2021-22. He has recently jointly authored a book on GST for Commerce graduate of Usmania University, Theory and Practice of GST. With these few little words, let me introduce you. Let me call on stage Satish Bhai, kindly give your presentation.
Good evening to my brothers and sisters of Hyderabad. At the outset, I thank Committee for Members in Practice, Institute of Chartered Accountants of India, New Delhi, and Hyderabad branch of Southern India Regional Council of Institute of Chartered Accountants of India, Hyderabad. The topic given to me is litigative issues in GST. When the chairman of the branch has called me and said, "Sir, you have to speak on this topic," then I said, across India there are more versatile and wise speakers available across India, but why you are selecting me and why you are taxing me? So he said that no, we want you to be speaker on this topic and we want to tax you. Really, it has taxed me a lot, and this opportunity has given me to deep dive into the subject and to come out with the litigative issues in GST. To my surprise, there are more than 50 areas where there are litigation is possible in GST. But time given to me is only 90 minutes. Now it is cut short to 45 minutes. So at 5:30 I am going to conclude this session. My presentation I have divided into two parts. One, whether a practicing chartered accountant is suitable for GST litigation practice. Normally we see that in litigation practice mostly advocates are preferred, but whether a chartered accountant can be suitable person for that area of practice, then I will be spending 10 to 15 minutes on that. Then I will be taking you through 5 litigative issues. Out of 50, I have selected only 5 because 90 minutes of the time given to me. Because if I take all the 50, I will have to spend maybe 1 minute on each aspect. Then that will not be a proper from my side. So I have selected 5 topics on which I will be speaking. So those 5 topics generally we come across in our daily life, and we are facing a lot of problems with the department during audit and even while answering the show cause notices. Let us start the presentation. Then I have told my agenda, that is litigation, mitigation where litigation, that is CA suitable for this litigation practice or not, and the litigative issues in GST. This is going to be my simple agenda. I will not take much of your time. 5:30, we all will leave the hall together. So, I will coin this topic as mitigation via litigation. We chartered accountant are love to mitigate the issues. We don't want to litigate any issues. That is our attitude, especially as a chartered accountant. But in certain times, department goes against us, or law goes against us, or maybe the associate does something wrong, so we have to enter into litigation also. So in that situation, whether a chartered accountant is suitable or not. I am using the word especially because in Hyderabad we call not special, special child. So that's why especially. Because chartered accountant possess the knowledge of audit, account, business and law. Now listening to the before session, then we know the little bit of technology also. So we have possessed 5 special features from other professions. An advocate may be having the knowledge of law, but not accounting and audit. A practitioner has the knowledge of law or maybe bookkeeping, but he is not having the expertise knowledge into accounting and the audit field. But we have blessed with that special quality when it comes to a chartered accountant. So, what are the essentials one chartered accountant need to have to venture into litigation practice? I am not talking about the compliance practice, litigation practice especially. We need to have the knowledge of business and also understanding of the law. Which law? I will maybe in the next slide, maybe after 2 bullet points, I will speak which law we need to have the knowledge. But we need to know understand the business of the client. So, institute from our curriculum itself, they have developed our thinking process and our analytical thinking and our wisdom so that we understand the business very easily. If you are from any corner of the country or any particular caste or community, but a chartered accountant can understand the business of the client. That is, we are equipped with that. And we should know the legal precedences, notifications, circulars, instructions, whatnot, which have been issued by the government, the parliament, the board, the commissioner in the board, and even the state commissioner, trade notices, all these things we need to keep an updation on that, we should know all those. And we need to spend time on regular updation in of issues decided by the courts. So every day, we maybe in a week's time, 10 court judgments will come. We should be able to spare time and read and understand what is the issue raised by the petitioner and how it has been countered by the respondent and how the judge has taken the issue in discussion and how the court has come to conclusion and what point the court came to conclusion, whether in whose favor it is. Why that favorism has been taken in the judgment, that we need to know. Unless you read the entire judgment, we cannot analyze this. If you read the concluding paragraph, basing on these findings, we say that the appeal is dismissed or allowed. That is not sufficient. We need to read the entire judgment, maybe running into 4 pages or 400 pages. It is immaterial. It is only pages for us. The information in the judgment on the discussions and flow of the case, that is more important than the other aspects. We need to have the working knowledge, I am using the word working knowledge, not an expert knowledge. Let us not become a lawyer and become the expert on the law. Only at least we need to have the working knowledge of, say in our IPCC, it is working knowledge when it comes to final expert knowledge. So IPCC level knowledge is sufficient with respect to law. That is, in respect of interpretation of statutes or laws, we should know. Constitution of India, not entire constitution. At least Article 14, Article 19, Article 256, Article 265, Article 279A, Article 246A, which required, and even Article 234W and Schedule 7, Part 1, 2, 3 and Schedule 12, which are relevant for our practice. At least that part we should be conversant with that. And Civil Procedure Code and Criminal Procedure Code, Indian Evidence Act, which are required to establish the evidence. So when we go to an officer for adjudication, we should know how the drafting has to take place. For that, we need to have CPC knowledge. So when the client is arrested, at least we should know what is criminal law, how the bail is filed, how the advocate is appearing. In what cases the counter argument of the public prosecutor is required or not. All these things, little bit of information we should know. And also we need to have the Indian Evidence Act knowledge, because when you are supporting a client or arguing on behalf of a client, how to remove interpretation made by the department, how to come out of that, what kind of evidence is required, and how to prepare that evidence and what documents are required to be submitted. That little bit of evidence, because evidence lab defines the documents in the 2-3 categories. If we know that how the paper can be converted into evidence, that at least art we should know. And Indian Contract Act, because the GST law deals with business, so one need to have Indian Contract Act. And I mentioned here is all other allied laws. So when you are dealing with a builder case, then at least RERA knowledge and the Stamp Duty Act and Transfer of Property Act, basic information of that. If you are dealing with a trader, then Sale of Goods Act, Transfer of Property Act knowledge is required. And apart from that, General Clause Act, one who is into litigation practice, at least you should know what is the content of the General Clause Act. So if you have basic these, apart from GST law, another 10 or 15 laws, if you have a basic knowledge, because of the recent amendment with respect to the labeling and prepackaged and labeling, now we have mastered the Legal Metrology Act also. When it was branding and unbranded, then we have mastered the trademark. Though it is not our domain, but we understood the Trademarks Act. Now because of this amendment, now we have entered into Legal Metrology Act also. Now I feel that comfortably we can practice legal metrology also, if it permits. And we need to have a little bit writing skills. May not be I don't want to make you like Shakespeare or maybe Rabindranath Tagore, but at least what we are writing, the other person should be able to understand what we are writing. And what the idea we want to ventilate to him, whether he is able to catch that idea or not. That simple English is required, what Sapish is saying, that's all. I am not good in English, but still I could be able to communicate what I want to, what is there in my mind, I will be able to communicate to you all. So that kind of English is sufficient. And one should have the flair to mitigate the issues with litigation or via litigation. We always go for the mitigation of the issue, we don't want to raise the issue, but still certain times litigation becomes inevitable. So with the help of litigation, how we are going to mitigate the issue, that is that flair one should need to have in the practicing area. Litigation starts with replying to show cause notice and ends at the Supreme Court level. So in this, from show cause reply to Supreme Court, in all the places we are not allowed. Only for replying show cause notice, appearing for the adjudication, and for first appeal and second appeal, that is tribunal. So far tribunal is not constituted, but whenever it is constituted, the charge account is permitted. But when the matter goes beyond tribunal, before High Court or Supreme Court, but we know the facts better than an advocate who is appearing before the High Court. So we need what I call briefing the advocate is required. So that briefing can be better way we can done by a chartered accountant fields, because we have a quality of accounts, audit, law and business and technology. So, if the answer to the question is whether we have this skill set, the answer is yes, then you can start GST litigation practice. If the answer is no, then you have to work on that. I'm not saying negative. You have to work on that and then you come into litigation practice. Am I clear up to here? I think I have covered most of the things which a litigation practice is requiring. So now I venture into litigative issues in GST. I have selected 5 topics out of 50 topics. Director's remuneration, where everybody is facing in day in and day out in most of the show cause notices. Definitely, if it is a company, then we face this. Then we are facing with the anti-profiteering issues, and we are facing with the valuation issues in GST, and also we are facing with the Whenever any person pays fees to the government or maybe local authority, like a builder is being granted with the permission to construct a building, on that the department is asking us to pay the under reverse charge 9 subsection, whether that is really required to be paid or not. That fourth issue, and then last issue, I am challenging the rate notifications, whether they are valid or not. So on these 5 topics I am going to deliberate. I think 30 minutes is not sufficient, but still I will try to quickly go through that. The first topic selected by me is director's remuneration. Schedule 3, entry number 1 says that services by an employee to the employer in the course of or in relation to his employment, neither it is supply of goods nor supply of services. So under Schedule 3, the employer-employee services are exempted. They are not treated as not liable to GST. In the same statute, Central Tax Rate Notification 13/2017, entry number 6, it says, services supplied by a director of a company or a body corporate to the said company or the body corporate. In that situation, the supplier is director of the company, the recipient is the company of the body corporate. The rate of tax applicable is 18%. So, any services provided by the director to the company, now the legislatures are not legislatures, it is the government. The board want to levy tax on those services under the reverse charge mechanism. On one hand, you are exempting the employer-employee relationship, and we accept that directors are employees of the company. Yes or no? So when you want to not to levy tax on employer-employee relationship, then why you want to levy on directors' remuneration? If you look at the service tax regime, the same stand was taken, the same principles of the service tax have been brought and put into GST. This employer in relation of employment, it was not taxable, and director services were subjected to GST. Same situation was there, but when the treatment what is given during service tax is different from the GST treatment. While there is a shift from the government side. We will examine those issues. Section 2, subsection 34 of the Companies Act 2013 defines director means a director appointed to the board of the company. And section 2, subsection 54 defines who is a managing director. There is as per the articles of association and memorandum of understanding, he will be doing the substantial activity of the company, so he is an employee for the purpose of that Companies Act. And the Companies Act divides the directors into whole-time director, managing director, independent director, nominee director, etc., etc. So from this types of directors, we can categorize them into executive director and non-executive director. This is what the Companies Act says. The question is whether the director is an employee of the company or not. The fact nobody can change, but a road notification cannot change the essence of contractual obligations and nature of the activity. So a director, what the services is provided to the company, that no statute can change. That's what I want to say here. If you look at Commissioner of Income Tax versus L. Armstrong Smith in 1946, it is held that the services of the director are treated as income under the salary, not under the income under the basis of profession. That is what we have. In the similar 3 cases also, under the ESA Act, under the Income Tax Act, everywhere it was held that director is the employee of the company. When director is employee of the company, where is the need for you to levy under reverse charge? How that has been came into existence, then we will examine and what are the open-ended issues which are required to be answered. In service tax, in these 4 cases, it was held that director's remuneration is employee and not liable for reverse charge under service tax law. When it comes to GST law, In Rajasthan Advanced Ruling Authority, Claycrafts India Private Limited held directors are not the employee of the company irrespective under what head the remuneration is paid. And it said RCM is applicable. In service tax, same authority held that it is employee-employer. But under coming to the GST, they said it is not. In other advanced ruling in Karnataka, Alcon Consulting Engineers India Private Limited, services provided by director to the company are not covered under the Schedule 3, as the director is not the employee of the company, hence liable to reverse charge mechanism. So blanketly they are saying that directors are not at all employees of the company. It is not a fact. In Karnataka A.R. Nilkumar Agrawal case, it was held that for the purpose of calculation of aggregate turnover, salary of executive director not to be included for the purpose of calculation of aggregate turnover. Non-executive director salary need to be considered for aggregate turnover. That means this AR made a distinction between executive director and the non-executive director. It said that executive director is salaries comes under the salary not required for reverse charge mechanism, and in case of non-executive director, it is liable for reverse charge mechanism. Following that, the government has issued a circular number 140/10/2020 dated 10th June 2020. They have same thing they have came here. Leviability of GST on remuneration paid by the company to the independent director of those directors who are not employee of the said company. So there is that in case of independent company, not non-executive director, the reverse charge is applicable. In case of other categories where they are considered as employees, no reverse charge is required. This has been clarified by the board. So I say that this circular has clarified saying that they are discriminating the functions of the directors. That they are saying non-executive director and executive director, they are providing a different set of functions. No, in fact. Everybody, all directors are doing for the company only. Next thing is, if a director is renting the property to the company, whether that is liable for reverse charge or not. A director who is also a doctor and also a director on the board, and is providing as a consultant to the services to the consulting physician or consulting surgeon to the hospital. Whether those services will be liable for forward charge or reverse charge. This circular has clarified that the salary paid to those directors where they are executive directors, only salary portion which is subjected to TDS under section 192, it is not liable for reverse charge. Other services where it is paid under section 194J, that is liable for reverse charge, not under forward charge. This circular has clarified. So still there is a grey area. Lot of grey area is there, but that need to be tackled and understood. And for all these issues, I am not going to give any solution. Just I am bringing to your notice, these are the issues are there. Because I am not the Chief Justice Venkatramana or Lalit, so I cannot give any judgments like that. Only just I am bringing to your notice that these are the issues. So next we will move to the license fees. These are open issues. I prepared these slides on 15th and 16th, so I was there. My mind is running with the national flag, and those colors have been captured. Related to the fees, Central Tax Rate Notification 13/2017, that we know that it talks about the reverse charge mechanism. Any services supplied by the state government, central government, union territory, local authority to a business entity excluding services of Department of Post, services in relation to an aircraft vessel inside or outside the precincts of an airport or a port, and transportation of goods or passengers. So this is the entry where it says any services provided by this government, or the union territory or to the local authority to a business entity will be liable to reverse charge. It's clear, this entry is what it says. In which supplier will be the state government or central government or union territory authority, and the recipient will be any business entity located in taxable territory, and the rate of tax generally 18% because they have not been specified anywhere. So issue came up first time on this aspect is liquor license fees. Then telecom fees is there. Then building permission fees. Then shops and establishment fees. Like that we pay so many. So now maybe last month there was a spectrum action, 5G action. So there it is only fee paid, it is not tax. If that is a service by the government to the business entity. To call it as a service, anything other than goods is service. But everything other than goods is not the service. Anything, the wording is used. So anything which is other than goods, it is not everything. The word anything is very narrow, everything is wider. So in that, in the narrow sense, you cannot say that everything what the government is collecting from the citizen is not fee. So today I applied for passport, then they have charged me 1,500 rupees. If it is a fee, it is not tax, it is a fee. I am having GST registration, then I am required to pay reverse charge. So this is the issue, very big issue that has came up, and there is a lot of jurisprudence on this. So generally license fees, the liquor license fees or maybe insurance license fees or maybe road driving license fees, all these things comes under the license fees. And royalty generally when in case of mining activities, a lot of amount is paid to the government for mining the land and permits. If you want to have a party at your residence and you want to serve liquor, just to pay 6,000 rupees as a fee and you can serve the liquor at your home with the license. That is permission to serve the liquor. And permissions with road permits and all these things come under. So whether these will be a tax or a fee, let us not decide. Courts have already decided. Let us examine that whether it is a fee or a tax. And the courts have clarified into two categories. One is statutory fee, another is a regulatory fee. So what IRDA levies, it is a regulatory fees. It is not statutory. But for the purpose of driving license, it is statutory fees. The courts have categorized. And the courts also said that if there is a quid pro quo is absent in any fee, that amounts to tax. So for me, getting a driving license, I pay some fees. In that case, there is no quid pro quo from the government side. Because of absence of consideration from the government side. From my side, I am paying driving license fee. From their side, I am not getting any service or any consideration from the government. If I am a chartered accountant providing some service, client is paying me fee and I am doing the attested function. That is the service I am providing. Here, in case of statutory and regulatory fees, nothing I am going to get out of that. So in case of absence of that quid pro quo, then it is not a fee, it should be termed as a tax. When it is a tax, not liable for reverse charge. Let us examine quickly those cases where the courts have held whether it is a fee or it is a tax. In case of Corporation of Calcutta and others versus Liberty Sigma, wherein the mutation fees paid to the municipality for change of the ownership from one person to another person. That was held that quid pro quo is must in case of fee. In the absence of it, the same will be levy of tax. So whatever paid to the municipality, it is in the Article 234W of the Constitution. Schedule 7, Schedule 12 comes into picture. So there is no our wish. It has to be paid compulsorily. So in that case, it cannot be called as a fee, it is rather a tax. In case of commissioner, Hindu religious endowments Madras versus Sri Lakshmindra Tirtha Swamiyar in 1954 Supreme Court said levy of fee is only a particular form of the exercise of the taxing power of the statute. So fee, the name given for the tax is fee. That's what the Supreme Court held in this case. In case of Commissioner of Central Excise versus Chatka Sugar Company Limited in 2004, nomenclature used by the legislature is of no consequences in deciding as to whether the levy is tax or fee. Whether you call it as fee or whether you call it as tax, nomenclature does not make any difference. It is tax only the court held. In the last important judgment here is Calcutta Municipal Corporation versus Shreya Mercantile. The Supreme Court held that if earning of revenue rather than regulation or provisioning of service is the predominant factor for the levy, the revenue collection is dominating the providing of service to any authority, then it becomes tax rather than a fee. So from these four case laws, there are hundreds, thousands of case laws on this issue. But I have selected only four case laws because of paucity of time, and I want to debate on this topic, saying that the statutory fee or a regulatory fee collected by the government authorities is only nomenclature is fee, but it is a tax in the form. If you enter into a municipal park, for entering the park you pay 5,000 rupees as entrance fee. Is anything municipality is providing to your service? No. If you enter into a cinema theatre by paying 400 rupees, then you are getting entertainment for the next 3 hours. But in case of a park, nothing like that kind. In GST 2017, the issue relating to the liquor license fee was started. Various people have went to Supreme Court and High Court, and finally the court said that it is not liable to RCM, and finally the board has come forward and issued a circular saying that liquor license fee is not liable for reverse charge mechanism. When it is with liquor license fee, it is not liable for what other fees are doing? The same nature. Why not that circular applies to other services like telecom license fees, 2G, 3G, 5G, 4G, all this. And moreover, in the bottom if you see, all these costs by way of fee is factored in the sale price by the business. Whatever top time I'm taking from the Airtel or maybe from Jio, that license fee is part of that consideration. When the government is getting on the output, why you are bothered with the reverse charge mechanism? If I pay reverse charge mechanism, the tax, I will eligible for input tax credit. It is revenue neutral. What is the fun in collecting taxes on this? Unnecessary harassment, unnecessary litigation, unnecessary compliance. That's all. Same with the casino fees. The state of Goa and the state of Sikkim are fighting on this issue. Goa says we want a higher share. Sikkim wants, we want higher share, because only 2 states are permitted to run the casinos. They are against the council. Now they are saying that they are not going to accept your whatever the rate of tax, that is 18%, 28%, we want a higher share of that. That is going on RT council. Also now the casino fees is now under the dispute before the Supreme Court. The final judgment has to come on that issue. Mining license fee, that royalty, it is there since 1994, Finance Act 1994. It is maybe 25 years it is going on. We don't know when it is going to finalize. And building construction permission fees, every builder is subjected to that fees. And any service the government in turn giving to this businessman? No. Only to construct as per the municipal norms and regulations, whether you are constructing or not. Only for that purpose the fee is collected. No quid pro quo from the municipality side. Then it is a tax, it is not a fees. Same stops in establishment fees. But if you find in various audits by the department, they are charging, if the businessman has not paid the shops and establishment fee, the reverse charge, they are charging and they are demanding that, and it is becoming a litigation. It is only an illustrative list I have given here. There is a big list of fees and which can be subjected to this. We'll move to valuation under the GST law. It needs long time, but I'll try to put the things in a crispy way so that I'll save some time. Section 15 of the CGST Act deals with what is the valuation. Section 15 subsection 1 says that the actual consideration paid or payable between the supplier and recipient is the transaction value. The transaction value should have two conditions. One is price is the sole consideration, and the second is the parties are unrelated. If these two conditions are met, then whatever the value that is paid or payable will be a transaction value. Then Satish, what is the issue there? I'm coming to that also. What is the issue there? So there are certain statutory inclusions to be made in the transaction value. They have defined that any tax paid under the other statute to be part of the transaction value. Anything which is required to be done by the supplier, but if it has been done by the recipient, if it is not part of the sale consideration, then it has to be added. Any additional facility given to this recipient by the supplier, those like commission, extra package, packing and forwarding charges like that, that need to be added to the transaction value. Or even the law says that if the supplier receives any interest, fee or penalty for delaying payment of consideration, that also form part of the transaction value. All these will be subjected to GST. Now there come the exclusions from the sale tax. There are only one exclusion, that is discount. Discount has been defined in two ways. When the discount is mentioned in invoice is one situation. When the discount is not mentioned in invoice, but it is given later point of time. The first category, it says that if the discount is mentioned in invoice, that is well and good, we accept it, that will become the transaction value, there is no dispute on that. When it comes to the post-supply discount, the government said that they have to fulfill two conditions. One is, the discount is given as per the terms of the agreement entered at the time of or before the supply, and the recipient has reversed it into tax credit. And they have not mentioned the third category, that is going to be the biggest dispute. They have visualized at the time of supply of goods, and in terms of agreement, at the time of supply, the discount is not given, but later it is allowed. But what happened to the subsequent supplementary discounts as a trade practice? That cannot be, benefit cannot be given to the recipient. That has been ignored. Then that is going to be the biggest litigation in GST in future. Already started, the board has given 2 notifications. Out of that, 1 notification already withdrawn. So that second notification is issued without application of mine, because that is the reason they have withdrawn it. And the section 15 explanation says who are the related parties. This in nutshell what is valuation. And there are rules relating to the value if that the basic condition of price is not the sole consideration or the parties are not related, related, then the valuation rules have to be invoked. But this is not the crux of the subject. The crux of the subject is actually paid or payable. Everything revolves on the paid or payable, not on the parties, the consideration. It is paid or payable. So, supplier and the recipient have agreed to a certain amount. Say agreed for 80 rupees. Invoice is issued for 100, 20 is shown as discount, 80 rupees is the net consideration. What is actually paid or payable? 80, that has been reflected in the invoice, well and good. They have agreed in advance saying that I will give you after 2 years, if you purchase 1 lakh of quantity from you, I will give you additional discount, but not mentioned in invoice. Can this law stop them? But lawmakers have not envisaged this. In Govind Saran, Ganga Saran case, Supreme Court has held the machinery provisions for assessment computation provisions is a sine qua non for the operability of the charging provisions. Otherwise, charge of tax will fail. In other words, the charge of tax depends on the clarity of the valuation provisions. Well famous case now. So unless the valuation provisions are clear, the charging section fails. When charging section fails, the machinery provisions of assessment also fails. If you look at one aspect, section 16 subsection 2 clause A, the value of supply shall include any taxes paid under the other statute which are valid on the day of supply to be added to the invoice. Above that, it says the consideration paid or payable. Why these taxes have to be added there? If you consider the parties related and the consideration, then you will confuse yourself. But if you concentrate on the issue of paid or payable, then you can establish a good relationship between 15.2 clause A. Otherwise, you will miss the bus. One issue is relating to the post-supply discounts. Post-supply discounts, we know that there are two conditions. First condition is that it is in terms of the agreement. Second is the attributable GST related to the credit note has to be reversed by the recipient. If these two conditions are met, then the supplier can reduce his liability. In respect of these post-sale discount, the board has given circular 91/11/2019, where they have clarified on 4 issues. One is free sample as a gift. The board clarified that in case of any goods are given as a free sample to the recipient, then they are not eligible for the input tax credit because they are under the 17 subsection 5, they are under the restriction. And coming to the buy one get one free, they said that buy one get one free if you are purchasing 4 items, along with that another 4 items are given, the invoice is issued for 8 items, not for the 4 items. So your transaction value will be accepted, no reversal is required in that case. When it comes to target-based discount, the board has clarified any supplier who is giving target-based discount, say in a month if you purchase 10,000 items from me, then I will give you 2% additional discount. That is target discount. Then the board clarified that the recipient has to compulsorily reverse the input tax credit. That has to be established by the supplier. And second and subsequent discount, here comes the actual problem. Second and subsequent discounts are never mentioned in the agreements. It's a trade practice. At the end of the financial year or maybe at the end of the contract term, they do additional special discounts. Those discounts, the circular says that they have to comply section 34 subsection 1. The board clarified. So what section 34 subsection 1 says? The credit note can be issued for where the rate, if the tax value is mentioned more or the tax is mentioned more or the goods have been returned or or where the services supplied are insufficient, then in these 4 cases, credit note can be issued. And there is a restriction saying that it has to be issued within September, due date for the September month return and all this, blah, blah, blah. So practically for second and subsequent month, can you issue a credit note? It is not taxable value, it is not tax, it is not return of goods, it is not deficiency in services or deficiency in supply. So practically you cannot issue. This is a still open area for challenge. They said they have clarified that in case of subsequent and second and subsequent discount you can issue provided you follow section 34 subsection 1 blindly. But if you analyze section 34 subsection 1, practically you cannot issue. Are you agreeing with me? And the another circular with respect to valuation is circular number 105/24/2019, which was issued better, but later basing on the trade representations, it has been withdrawn by the board. So this circular has clarified on two aspects. If any recipient is doing some additional advertisement, additional space is provided to the supplier, or doing some additional activity to the supplier for more sales, then in that situation, the additional activity done by this recipient, that is a distributor to the manufacturer, it amounts to supply. Then the recipient will become the supplier, supplier will become the recipient, then they have to issue an invoice. So there was a lot of debate was going on and cases were filed before courts, and finally, as per the trade representation, the board has withdrawn this circular. Now it is not valid, so we can ignore it. So next issue is price escalation post supply. Price is increased post supply. It happens certain items possible. Today I have entered into an agreement saying that I will supply to Pankaj Bhai, what is that, in vegetable oil at 40 rupees kg. But when I imported it, it has become 45. I was supplied him, but when the moment I received my inward export invoice, for inwards, it has increased. So later I can increase the value or not, whether it will be subjected to GST or not. That is become a very big issue. If you consider the settled excise provisions, the date of removal of the goods was taken for escalation. So the escalation has happened after 1 year. The date of removal is before 1 year. For this 1 year, interest was liable under the excise law. But coming to the GST law, it is considered that interest is not liable, at least. But can you issue an invoice for that? I have supplied at 40, now my rate is fixed at 45. For 5 rupees, can I issue an invoice to my recipient Pankaj Bhai? My answer is no. Because if you issue a tax invoice, then it amounts to fake invoice without supply of goods. Only debit note can be issued. For that, again, section 34, subsection 1 puts a lot of restrictions on me to when to issue debit note. So literally I cannot collect GST on that, but on the other side, department is asking me to pay GST on price escalations. And valuation of related parties is always a headache. If I am filing my wife's return, then this problem will come. Everybody is facing in practice also. If I am a partner and if I am filing my firm's return, then the related party is there. I am partnering in another firm, if I am filing that firm's return also, whether I am charging at market rate or not, like kind and quantity. It cannot be established. Notional interest on fixed security deposit. So in case of most of the services like franchises, where the franchisor will take the security deposit. On that they will pay notional interest. Now the department is demanding on that the notional interest is liable to GST. They say that this deposit is because of the supply. The cases are there. And reimbursement as a pure agent in service tax also, in GST also, you have to satisfy certain set of conditions. There should be agreement between the recipient and supplier saying that you are my pure agent. In terms of that agreement, I have to incur expenditure on behalf of the supplier, recipient. After spending it, I can recover it. All these conditions, I cannot even take 1 rupee benefit out of that, and I should not hold any right in the what I am procuring on behalf of my customer. So if all these conditions are met, then only you are eligible. The question is, I pay 5 crores of income tax on behalf of my clients. I pay 10 crores of GST on behalf of my clients. Whether I will be considered as a pure agent? a practicing chartered. Any answer? You're a pure agent. You are wrong, sir. In case of pure agent, first expenditure is paid, then reimbursed. In case, our case, we are receiving in advance. Then only we are paying it.
And the amount also should be exact.
Exactly.
Can't be 1 rupee
More or less. So these kind of issues in valuation are there. So next I am moving into anti-profiteering. I will
I'm going
not.
to charge my wife for the 31st July return.
You have to charge what you are charging to the client at a higher rate. That rate you have to charge to your wife. May not be you receive the consideration, but you pay the GST.
Any
We have to go home, sir. We have to
Any
go home
good
and
lawyer?
I'm there now.
sir, we have to go home and live happily. Don't.
So I'm not going to talk much on the anti-profiteering aspect, but I wanted to speak on two aspects. When we go into the subject, we will understand. The authority does not have the proper procedures and the constitution is not proper. These two issues are there. And this section, what this was there in 2017, the upper portion, and what is there in the italics that has been introduced by Finance Act number 2 of 2019 from 1st January 2020. So initially it was not there, later it has been brought into statute. And this section 171 subsection 1 defines what is profiteering. Any reduction in rate of tax on any supply of goods or services or the benefit of input tax credit shall be passed on to the recipient. This is what the profiteering is defined. The profiteering, what has to be done? It has to be done as a commensurate reduction in the price to the recipient. So what is that commensurate reduction? Nowhere defined, nowhere quantified, nowhere given as a mathematical calculation. If you are not eligible for input tax credit under Rule 42 or 43, there is a set of procedure, set of mathematical equations you have to reverse the input tax credit. Like that, for commensurate reduction, there is no mechanism. It's a big dispute. And NAA is having one chairman and 4 members, and the chairman is rank equal to Secretary of Government of India, so he is the executive. 4 technical members, commissioners of the state or central government, may be present or past. They are also executives. So there is no judicial member who is overseeing the National Anti-Profiteering Authority. And the duties of the NAA is reduction in the price, which is their order to pass. The reduction in the price, what is the reduction has to be made, that has to be passed on to the customer. The return it to the recipient or transfer it to the consumer welfare fund, and levy of penalties and cancellation of registration. These are the 4 activities which the NEA is required to do. And initially the tenure of the NEA was 2 years. It has been extended by another 2 years, then again 2 years. There are only 6 years. When there is a transition from non-GST regime to GST regime, initially for 2 years it was sufficient. But again extended to 2 years, it is not sufficient. Again to the 6 years. I think something is wrong in the idea of the government. And it may become a permanent feature in GST also, which is unwarranted. And there is no appellate authority over the NEA. Directly case goes to the Delhi High Court, no other High Court. NEA is located in Delhi. If you are in Kerala, there is a petition filed by one single recipient without payment of any fee. Just he attaches the invoice and sent to the NEA, then the proceedings will start. From Kerala, you have to represent your case before the NEA Delhi. Against, if you want to file a petition or anything, you have to travel to Delhi. They don't have any regional benches also. And their powers and the methodology and the procedures are not being defined under this law. The total power is given to the NEA. They can determine the methodology, they can determine the authority, they can determine the procedure. unfettered powers have been given to the NEA, which is not good. So in case of Gwalior Rayan's Company versus Assistant Commissioner Sales Tax, Supreme Court in 1974 held excessive, it is amounts to excessive delegation. Excessive delegation is bad in law. So definitely NEA is also having excessive delegation. And even if you look at the compensation cess, originally it was 5 years, now it has been extended to another 2 years. Compensation cess may become a permanent feature in GST for more revenue. I would like to draw your attention on Article 19(1)(g). 19(1)(g) talks about right to free trade, business or profession. It says, 19(1)(g) says that every citizen of this country has a freedom to do his own profession in business, in trade. But this NEA is coming against that. In case of Sapphire Ports versus Union of India, Gujarat High Court said NEA to limit their investigative powers to the product in question only and not to widen the ambit of their investigation. So one product is under scrutiny of the NEA, they want to do the all other products which are manufactured or which are distributed. So the Gujarat High Court said that you have to restrict your scrutiny powers. In Jubilant Foodworks it is said, the court has granted interim relief to the Jubilant Works and they said the taxpayer made a prima facie issue that the NEA is lacking of methodology. It is sufficient that say that NEA is not having any proper methodology. Hope I am clear on this part and saying that NEA is ultra-vires the constitution, ultra-vires the act, ultra-vires the principles of financial justice, blah 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 blah, so many things. But handling them is very tough, very very tough. Even you can handle ED, you can handle DRA, you can handle anti-evasion, you can handle DGGI, but NEA is becoming very very tough. They even don't listen to you. They even not give 1 minute to speak. You have decided this is the methodology, this is the calculation, you are not passing on the benefit, you pay this much penalty, you pay back to your recipient or transfer to the fund. That's only the order. And these are the cases where the NEA has given all the orders against. This is only a list. I can give you at least 1,500 orders. All against the trade. So is it not against Article 19(1)(g)? So I'll take one example, McDonald's. In McDonald's, what happened? The rate of tax was 18%. When the rate of tax was reduced to 5%, they have increased the base price. And the 5% was maintained. 5% is only charged, 5% is only collected. The MRP is maintained, the base price is changed. Are you following me? The base price is increased, they are not cheating anyone. Because across the globe they have to make a mechanism. It is not that easy in case of McDonald's to change the MRP overnight. To avoid that, they have increased the base price, that means they have increased their profitability. Is earning of profit is unconstitutional, is a crime. But in case of McDonald's, the NEA said that you are making a profit earning there, you pass on the benefit, or because you cannot catch the person who ate one burger. So entire amount was transferred to welfare from running into 2 crores or 5 crores or something on one single paper of complaint. Like that, every case is like that. Hindustan Unilever, the matter is pending before the Supreme Court for it verdict. When it will come for the hearing, we don't know. The last point, which probably I've crossed my time also, what I promised. Sorry. When I started talking, then I stopped watching the watch. In 10 minutes, I close the session. I think I have permission. See, Section 9, subsection 1 of the CGST Act, I'm talking about the rate notification and definitions therein. So for every rate, whether it is goods or services, the board issues a notification saying that for these goods, this is the rate of tax, these services, this is the rate of tax. From where they are getting the right for the government to notify that, this is section subsection 9. Central goods and services tax at such a rate not exceeding 20% as may be notified by the government on the recommendations of the council. By reading this section, we feel that it is proper. The legislatures have delegated the authority to the government, that is board, to notify the rate of tax. As per the recommendations of the council, within that rate, they are notifying that, following the recommendations of the council, and they are issuing the. My question is here, whether the legislatures have the right to delegate this. Had anybody thought on this? Whether the government of the parliament or the state assembly have a right to delegate the rate of tax notifying the rate of tax to the government, executive. In my opinion, they don't have. One may say that Article 279A of the Constitution says that the council has the power to recommend the. Yes, they have the power to recommend. But who has to notify it? Legislatures, not the government. If you look at Income Tax Act, every year in budget, Finance Act, the rates are notified. In customs, rates are notified in budget. In the central excise, rates are notified in the budget. If you look at the Professional Tax Act, the rate is notified within the statute itself by the assembly. Am I right or not? But only coming to the service tax and GST, this practice is followed. Whether the government have the power to delegate that essential right, the essential responsibility of the legislatures cannot be delegated. Let us look at the Article 265 of the Constitution. Article 265 gives the right to the legislatures to enact a law within the powers given by the Constitution. So the Constitution is giving the power to the legislatures. The legislature itself is a delegate authority. Whether delegate authority can further delegate it, the principle is no. Let us look at Article 265. It requires there must be a law. Yes, there is a law, Central GST Act, State GST Act, Compensation Cess Act, IGST Act. There must be authorized tax. Who has to authorize this? Constitution. Constitution under Article 265 authorized under Schedule 7, Part 1, Part 2, Part 3 to levy tax on that as per Article 265. Yes, they are authorized. Whom they are authorizing? The legislatures to levy the tax, not the government. The tax must be levied and collected according to the law. Yes, as per the CGST Act, they have to levy and collect the tax. But the second point is violated. Second bullet. The law must authorize the tax. The GST Act must authorize the tax. But you cannot say that in section 9(1), I have authorized it not more than 20%, the government can notify. No. As a father, I have to perform this marriage of my son. That cannot be delegated to another person if I am alive. If I am no more, then my brother or my close family relative can perform that. But I am alive, I am bound to do that. In the same manner, for the legislatures, the rate notification, they have to do it compulsorily. And in case of Synthetics and Chemicals Limited versus State of UP, the Supreme Court judgment in 1990, and Subhash Chandra versus State of Haryana, Punjab and Haryana judgment in 1992, both the cases, what they said, the authorization made by the statute to levy tax must be express. Yes, it is expressly given in section 9, subsection 1. Taxing power cannot be derived from the delegation of mere regulating power, even though the tax was within the competence of the legislature which made the delegation. Here this CGSTR rate notifications are failing. The rate or the tax, it is the legislature who has to do this. They cannot delegate it. The power to tax is not incidental or ancillary to the power of legislature on the matter. I may be mad saying this. I may be correct. I don't know. But this is the issue. If I win this case, what will happen to the 5 years tax collected by the government? Every recipient have to file a refund application, or the entire amount goes to Consumer Welfare Fund. I don't know, but we have to test this. Maybe after 20 years or 30 years, Supreme Court will say. But today, Satish Saraf is saying it 2022. In association of tour operators case, it is not directly related, but we can take from two from there. It is related to service tax. Rule 6A of the Service Tax Rules 1994, bringing within its ambit a non-taxable service, travelled beyond delegated rule-making power under section 94 2F of the Finance Act 1994. The court held that the said provision is ultra-vires the permanent statute. So, Service Tax Act when delegated that bringing a non-taxable service to a taxability, it was held as ultra-vires. Then legislatures, what they are doing is not ultra-vires. It is not a bad related case, but we can draw an analogy from this case. So a big question, the validity of the all rate notifications. With this, I conclude and I thank the Hyderabad branch and the committee of the members in practice. Thank you very much. Thank you and all for your patient listening.
Thank you, Satish Bhai. Members will just take 5 minutes more. Request you to kindly be seated. Satish Bhai, it so happened that after listening to you, I called my spouse. I went back and called my spouse. I said, you have to pay tax. He said one thing. घर कितने बजे आ रहे? I am sure that all of us has got benefited after listening to Satish Bhai. His words are very important and he has made his presentation in such a way that all of us have got enlightened by each word and by each minute. This small announcement I would request Kotak people to please come and make an announcement, and after that the chairman will say a few words.
So good evening all, sir, madam. Sir, my name is Yadridi from Kotak Mahindra Bank. So we are offering unsecured overdraft. Of the rate of interest is 10.75 and the processing fees is only 499. If anyone interested, please come to our stall now. Okay? Thank you, sir.
Thank you, sir. I would request the chairman of the Hyderabad branch, Deepak Bhattaji, to kindly address the gathering.
To Srimati Treasurer of the branch and moderator for the session. A very warm thank you to all the audience, the beautiful audience, for patiently being with us for 2 days and making this program a very good, super successful. We had hard work for last 15 days. Hope if even 10% of the audience change the processes and implement the new processes, we will be very happy, and take home of this session will be, let us change from our comfort zone and let us implement what our speakers have Nilesh Vikamse sir, our past president, Guru and Jana, Guru Prasad sir, who has taught us 2 to 500. The asset tool for networking and merger, international merger. So let us be all of us on that page and let us implement and come as the next big force of the world from India. So I hope with this thought in the mind and initiation, as the chairman of Hyderabad branch, I personally thank you for being such a wonderful audience. Thank you for the opportunity, and please honor us with all your presence in the coming months. We will have a lot of programs, so there's a lot of things in the box. So thank you and happy learning.
Wonderful and electrifying speech and making us aware about more about litigative issues in GST. I also take this opportunity to thank the hotel management, the Central Council members, the SIRC members, management committee of Hyderabad branch, and also especially the branch staff for their cooperation which has been extended during this course. I also thank our speakers, Gyan Sharma, Mr. Guru Prasad, Mr. Nilesh Vikamse, Mr. Umesh Sharma, P.R. Ramesh sir, T.S. Ajay sir, Mr. Premnath, Mr. Siv Prasad, Mr. Saran Kumar, and finally, Satish Bhai. Thank you very much. So, thank you very much audience for being here and encouraging us. Thank you so much. I request all of us to stand for national anthem.
Himalaya,